AMD is no longer advanced money destroyer. The stock is up almost 30% over the last months. It's been doing really well, but many retail investors are in disbelief. I mean, they can't even believe it. The stock has been such a disaster. It's still down 31% from the highs. But many people told me in the comments, just wait until earnings, man. AMD will report earnings. The stock is going back to 100 or maybe 80, $85. This is AMD. It never goes up. And many investors are just in disbelief that this rally is just temporary. It's not going to last. But I personally believe this rally will likely last. It is likely permanent. And I believe it's likely only getting started. I'm going to tell you why. I'm going to show you the numbers on how I believe AMD could 3x over the next 5 years up to $430 per share. So I really hope you enjoy it as always. Now, many investors have been giving AMD a hard time in terms of catching up to Nvidia with their data center segment, or mainly, in terms of the chips. But if you look at what AMD did, it's pretty much remarkable. Whereas the data center business was like $1 billion business in 2020, now it's a $14 billion business. This is almost a 14x. I mean, that's really not bad at all. And it's picking up steam, and now it's growing 57% year on year. Despite the export ban in China and all these kind of things, it's still growing 57%. So to me, a 14x in 5 years is really impressive. And again, it's starting to get much, much better. The client and gaming segment is also getting better. It's growing 28% year on year with expanding margins. Earnings per share has also been rapidly growing for the company. It's up 55% year on year. So everything has been getting better. And the main argument against AMD from most investors is that no one wants to use AMD chips. Everyone wants to use Nvidia. But the only reason investors, and I should say companies, would use AMD chips is just because they're cheaper. But this is really not true, because AMD's chips are better than the Nvidia chips in inferencing. And inferencing is what comes after training. And this is an amazing post I found on X that really explains the thesis on AMD. And this is what it says. It says AI is intelligence, but inference is the tax on intelligence. Every time an AI model serves a token, it costs money. And that's the real business of AI now, running models at scale. AMD CEO Lisa Su just said, you can cut this tax with the MI 355. And if you look at the AMD statistics, AMD sees 40% more tokens per dollar versus the Nvidia Blackwell, and it's much more efficient in terms of inferencing, and it's much, much cheaper, almost 50% less expensive than Nvidia Blackwell kind of chips. Okay, now if you look at who's using those chips, Elon Musk is now using those chips based on the latest annual meeting, or I should say latest investors day. Sam Altman is also using the AMD chips. Oracle is also ordering those chips. Saudi Arabia is partnering with AMD on many different projects. So it's not like no one wants to use AMD chips, because now, after we had a massive wave in training where Nvidia has benefited a lot, now inferencing is kicking in, and so far AMD is very well positioned to take advantage of this market, which is estimated to be a $400 billion total addressable market. AMD is well positioned, and I believe earnings per share will likely accelerate much more than what analysts are estimating. But yes, if you look at AMD, it does look like it's up a lot. It's up, you could say, maybe from the bottom, it's up. I could look at this chart, it's up like 65% from the bottom. So it does look like it's up a lot. But if you look at the multiple just went back to the mean. I mean, I was talking about it around 21, 22, and I'm saying maybe the multiple could go back to the mean. Now it just went back to the mean of 35 times. That's it. So it didn't really get any kind of a major multiple expansion. It's not extremely overvalued, at least on a historical basis. It just went back to the mean. This is all AMD did. AMD traded as high as 65 times earnings before. We're nowhere close to a historically egregious overvaluation for the stock, it just went back to the mean multiple. It got a mean reversion. This is what happened to AMD. And if you look at AMD's estimates, the company is expected to grow 47% next year in earnings per share, then 22%, 20%, and they will likely grow 20% after that, if not more, if they capture a larger market share from inferencing, which is expected to be a $400 billion total addressable market. Now, I could show you the numbers and try to keep this video short. I looked at earnings per share for 2025. It's $3.87, and 2025 was a little bit slower. This is mainly due to the China ban, but 2026 will be easier on comparable, so it's going to look like they're growing much, much faster than they really are. It's the same thing with NVIDIA. It's the same thing with AMD. But I took in $3.87. I put it in this graph, okay? Then I put in 47 as expected for 2026, then 20%, 20%, 20%, 20%. I think this is highly, highly achievable with the demand from AI. We're seeing it from Taiwan Semi. Taiwan Semi is still expecting massive demand over the coming years. Even Micron, which is a massive leader in memory chips, and AMD is well known for having a lot of memory, they're seeing a massive expansion in sales, even in Micron, which is historically a cyclical company. So that tells you the demand for AI chips and chips in general. And to me, I could see 20% a year easy for a company like AMD. So I put in 20%. If I'm using the same PE ratio as at now, 37 PE, 37 PE, no dividend, of course, I'm getting around $436 per share. The current price is $143 per share. This is $205 on the upside, or 25% CAGR over the next 5 years. This is a massive, massive return on a stock like AMD. Now, you might ask, maybe 37 times earnings is too optimistic. What if it gets a multiple contraction and it goes back to 25 times earnings? And we can actually look at that. And we can put in, let's say, 25 times earnings. If I put in 25 times earnings, then it would be around $294 per share, or around 106% on the upside over the next 5 years, or a 15.6% CAGR. This is still not a bad return at all from this price, and I would assume most of you have a much lower cost basis than $143. So for me personally, I still have call spreads going into 2027. I'm up more than 100% on those call spreads. The maximum I can be up to is like 450%. So for me personally, I am not selling them anytime soon. I think AMD's sentiment is starting to shift. I think the stock is just getting started, especially in terms of the business, the growth and everything. And I think the analysts have a long way to go in terms of revising the estimates. So I like the setup very much. I'm not selling it anytime soon. And I see at least 100% over the next 5 years, up to 250% over the next 5 years. So I like AMD very much. I believe this is not going to be another case where, AMD goes down on earnings back to 100, then it goes to 80, and it stays 80 to 100 forever. I think it will likely stay in this, around 140, and then hopefully make a long-term sustainable rally, kind of what NVIDIA did over the last few years, as it led in training, and AMD should be leading in inferencing. So that was just my opinion on AMD, not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.